Good morning, and thanks so much for tuning in to Stocks to Watch on BloombergQuint. I'm Mathew. We have the SGX Nifty that's once again indicating a negative start to trade, just like yesterday. But let's see if today the initial indicator turns out to be right. In the meanwhile, we've got some interesting stocks to talk to you about, and my guest today is Mayuresh Joshi of William O'Neill. Good morning, Mayuresh, and thanks so much for joining me today. I want to start by asking you about Hindalco and its plans to invest 7,000 crore rupees to double capacity to more than 600,000 tons. And this is going to take place over the next few years, but it is a significant statement to make. The plan will kick off with the setting up of a 34,000 ton aluminium extrusion project in Silvassa. What's your view on this, and how do you think the retail investor, both current and prospective, should approach the stock?
It's a positive morning, Alex. Thanks for having me in the first place. So it's a positive development which probably hinges upon the fact that capital intensity is coming back, and the kind of sectors that it works out of, aluminium, the backward integration that it has got through its Utkal operations for alumina. I think that probably gives it the right stead in terms of an earnings perspective. When you probably look at the Q2 numbers, Alex, Novelis had a very, very strong show. So the reported EBITDA per ton at 493 odd dollars was quite significant. The cost optimization on the domestic front and the reported EBITDA margins of 22.7% were significant as well. The third element, as I said, I think the expansion is also happening in terms of the Utkal alumina plant of 500 KT. So again, that will probably give them the right impetus in terms of the backward integration that they're probably looking at for their aluminium operations. Aluminium prices expected to remain stable at this point of time. They had come down post-pandemic to almost $1,500 a ton, but they've bounced back quite sharply to almost $1,750, $1,800 per ton, and expected to remain in that range. Net debt to EBITDA stands around 3.5 times, which is quite reasonable at this point of time, with reasonable cash both on Novelis and the Indian arm as well. So it's a positive development. My own sense is that the balance sheet strength is relatively better placed off. The aluminium market, as more and more production starts coming through from a demand perspective, and as supply starts flattening out, I think the prices should also stabilize, which means that the overall leverage should play on the balance sheet. So I think on all parameters on our O'Neill ratings, EPS ratings, RS rating, when you probably look at the overall master score as well, the stock has done phenomenally well. So existing investors definitely hold on. For fresh investors, I think wait for a pullback for the stock near its 50 DMA. I think that is the time when you can probably enter the market. That's given a opportunity.
Understood. The second stock that I want to talk to you about, there isn't much of a news-based development apart from the fact, and this is Sterling and Wilson Solar. Apart from the fact, Mayuresh said today, in fact, is the Tata Sons and Mistry hearing in the Supreme Court. So maybe there is some expectation that there will be a positive development, and some of those overhangs for Sterling and Wilson Power will get resolved. We did see very strong delivery buying yesterday, 44.4% in trade yesterday, which resulted in a near 17% gain. What is your view on the stock as of now, based on the current price and valuations, and the overhangs? They do still remain, right?
Oh, absolutely, Alex. And I think three prima facie factors that one really needs to watch out for. I think the kind of receivables position that they had and the debt repayment that they need to do, because of which they had come in some sort of a cash flow mismatch over the past few quarters. I think any resolution thereof might alleviate, might eradicate these issues. And therefore, I think what probably comes out from the hearing and how those cash flows get adjusted become extremely critical, but that does remain as an overhang. The second element, obviously, is that for the company as a whole, I think the order inflows have been quite significant for the first half. So almost 5,500, 5,600 crores of order inflows, which was almost 110, 120% of its restated order book for the entire part of FY20. So I think that is one positive sign that solar and renewables are getting a fair share of orders coming through. And the third element is obviously the export market. So I think the markets of Australia, America, where they've established themselves, key power producers, independent ones, or probably looking at players like Sterling and Wilson, gives some strength. But I think all these factors still remain as an overhang onto the stock. Though I think the government focus on renewables and specifically, I think solar is going to be extremely critical for players like this. But I think stay away. I think let that overhang get cleared. Let there be more clarity in terms of cash flows and earnings. Then probably we might have a look. Yes, the stock has given a fabulous return over the past few weeks. But we'll still like to wait it out unless we receive clarity. No point in jumping the gun at this point of time.
This is, after all, a view on the fundamentals, Mayuresh. I think it's important to point that out. Let's talk about the last group of stocks, Mayuresh, which is the asset management companies. And we don't yet have the development, but they could be active in trade on account of the fact that AMFI is set to release its monthly data for November later today. Now, a lot of people are interested in HDFC AMC. UTI AMC didn't really have the best listing, and Nippon is just about there. But HDFC AMC, I want to hear your view on this counter and perhaps on the other two as well. How do you rate this? I think there are a few out there who are not necessarily fans of buying into AMC companies, at least the shares that are listed. Are you of that view as well? Or do you think that it's a strong business to hold?
I think there is no issues with the business model per se, Alex. And with more listed players coming through, as you pointed out, UDI, AMC, what has probably happened over the last few months is how the equity AUMs have been stacking up against the debt AUMs in terms of the overall AUM pie. We've obviously seen some outflows happening over the last few weeks with markets scaling all-time highs. So in terms of heightened competition, the contraction in terms of the AUM market share, specifically in the case of HDFC AMC, I think just wanted to point that out. The AUM has actually contracted to 13.2 as of quarter ending September 30th. So how are they expected to see market share gains come back, consolidation of the same, expectations of new product, and the equity performance in terms of returns that they probably give, along with the cost optimization in terms of cost incomes and the overall OPEX to the AUM? I think those factors become extremely critical. Also, there's been some amount of management change that we have witnessed. So I think the investment style or the style drift, as we call it in terms of investment profiles, how does that take place in the next few quarters related to the AUM becomes extremely critical. So if you probably look at the entire embedded value, you probably look at how the AUM is expected to shape up. The model is fine. I think the penetration is very, very huge in markets at this point of time. But I think we'll still wait and watch, Alex, for the asset management space as well. I think there are a lot of stocks in the broader markets that are.
Absolutely. I think on that note, Mayuresh, it's going to be an interesting start to trade today with a lot of developments, not just here, but also globally that we're watching out for. Thanks so much for joining me as always.
Thank you.
It's been a pleasure. And to you, dear viewer, do stay tuned. Like I said, lots to track over the course of today, and you'll find all of that on BloombergQuint.com.